Sunday, another another week. Last week was nice. It was okay. Got what I wanted and what I needed. But every week I assess myself as a trader to give that high level of discipline in the market, that high level of accuracy in the market, because you have to be at the top of your game so that you can make money in this market. Last week was nice. At least Tuesday and Wednesday was a nice day to be involved in the buy. When you, my profit was like half of this, that is 64, around $64. That was my profit. But because of, I wanted to test run on Thursday. I know I was not supposed to trade on Thursday. I just said, let me use small lot to make my move. Use 0.05. I knew it was going to retrace now, but it does not matter. This was my profit last week. So at the end of the day, it was $55.47 profit. It was 64, but because of 65, I just wanted to test something. In trading without knowing what you are doing, you really can't make money from the market. You might have losses. These losses was on Monday. I was anticipating that move that Monday, but before then I knew that there's a possibility we might not move directly, because Mondays sometimes give headache because of that beginning of the week. They usually retreat down into discount and up into premium before moving in the underlying direction they want to go. So what was there is that as it tapped into that daily order block, I was thinking it's going to move that Monday, but unfortunately it went lower and tapped into the daily fair value gap. Then on Tuesday, I was waiting for that Tuesday to show me sound, because you don't want to be trying to get that market after having a loss on Monday, because at the end of the day you might be in the front of a running train whereby the weekly might even be bearish. You have to be very, very careful. So when Wednesday came and I saw that movement on Tuesday, I said, yeah, the money have come. So I opened 3 positions, I be 4 positions. You might say, well, risk management, I opened 0.16, I still open 0.5. I already made my mind that I was going to get that move. I know I might not be 100% right, but I was sure of that move very well. And I would have, if I knew I was wrong, I would have closed some positions so that I'll be able to trade the new session. But unfortunately, I was right. Then on Thursday, I just let me open small skin on, put small skin of my money into the market just to see how the market was. I knew it was going to be very good, just to try something. Because I know that they won't allow that market just move straight up like that. But it's just something that you need to try. So this was my last week profit. So let's go to the nitty gritty. Nitty gritty. Nitty gritty. Nitty gritty. This week is going to be a nice week. I want to show people one specific pair, USD You know, price itself is a liquidity provider. What controls price is outside of price, meaning whatever you know in price is also a facilitator of liquidity. You don't need to stress yourself. Market structure can only be market structure when it's in the underlying narrative of the market. You are looking at the 1 hour, 4 hours break in market structure. We have a break in market structure on the 4 hours time. We have a break in market structure on the 1 hour time frame. Can just be a retracement on the daily time frame or an inducement of liquidity to change the what? The narrative in a short-term view to what? To facilitate liquidity in the market. So now, price itself is a money generator. It generates money for the liquidity provider. This is GU. Wait, let me go back. Let me go back. USD Understand this. Market structure is just the physical outlook of the market. But liquidity is the story of the market. It is the what? The genotype of the market. Market structure is the phenotype of the market. If you understand what I'm saying. Now, sometimes when I'm through with my training, I always target 60 pips per week. Last week, I just let me put small skin on Thursday, 60 pips and I'm out. Or when I'm in profit, I say if I'm in a drawdown, when I'm in profit for the week, I'm out. Because I understand the movement of the market based on fractality of price. It's not going to be easy for you as a trader to want to be getting the market right at all times. In that way, whatever you make, you give it back to the market and you have losses. So let's go to the weekly time frame. Let's go to the weekly time frame. This is USD CHF. I'm supposed to go to the dollar index, but I love the way this market is moving. You see, at all time frame, you see some specific behavior, like especially on the weekly time frame, or you might see it from time to time on other time frames. You see, this market, it looks as if it's about to reverse in line with the underlying trend. But I tell you, it is calm. Possibly, I may be wrong, I might be wrong, but anything that will make price tap into this fair value gap, this down close candle, which is what? Which is an opportunity for money to be moved to the lower side or to the downside, because liquidity are resting below these lows. The beauty about trading is, if you have the ability or you know how to read price on the higher time frame and look for trends, because within those trends there will be what? All this, especially on the weekly, on the monthly. If you have watched the yearly time frame, possibly, that what create certain sets of inducements that will be against the underlying narrative of the trend. Tapping into this what? Sell side imbalance, buy side inefficiency. Thereby, there are not enough what? Buyers in the market that smart money wants to what? Use. Thereby, you will see something like this to induce more liquidity in the market. Thereby, if it taps into this fair value gap, you will see there's a high chance we might see a retracement down, breaking down and taking out all these lows for a continuation move down, whereby if you look now over a long period of time, you will see a balanced price range in the market. That is just the real truth. So for me, USD CHF should seek bearish move, especially maybe it taps into this fair value gap. Sometimes it doesn't need to tap into. Sometimes you might see that continuation move straight down, because anytime you see lows and lows are reacting, is a way of what? Trapping liquidity. Now, on the daily time frame, you will see a bullish trend. Okay, we see an high formed. Now, if you look, okay, we are not seeing lower lows, we are seeing a little bit of higher highs. This is not where they'll go. They'll not say, okay, let's go to the 4 hours time frame. Now, I don't need to go to the 4 hours time frame. I know there's a market structure break. Market structure is just the what? The phenotype of the market, but not the real genotype. The genotype is the liquidity of the market. The liquidity in the market. Now, we go to the 4 hours time frame. You will see, I don't need to go to the 4 hours time frame. I already know what is going to be in the 4 hours time frame. You will see structure making what? Higher highs and higher lows. Those higher highs and higher lows are future reference for liquidity to be cleared. Believe it or not. Let's go to the 4 hours time frame. Are you seeing what I'm saying? What is price doing? We are making what? Higher highs and higher lows. Not lower lows anymore. Anybody saying we are now in a what? In a short-term uptrend. Now they begin to draw levels on the 4 hours time frame. We have a level here. We have a level here. We even have a level here. Okay, we have a level here. So, okay, we have a level that have reacted here. But in a market that is seeking lower price, in a market that wants to seek lower price, all these levels are future reference for liquidity to be cleared, thereby violating the underlying facilitator of liquidity in the market that support and resistance, order block, bearish breaker, bullish breaker. Reason being, it is not in the underlying narrative. The genotype is the liquidity of the market, thereby we might see or we will see, because the market is dynamic, it's not static, in such a way that predicting the market is not easy, but there are things you need to do for you to predict the market. So any rally to the upside, possibly we might see price come to this. Sorry, let me erase some things. Yes, we might see price come to this fair value gap right here. That way it has induced a lot of what? Buy liquidity in the market. Before what? Moving aggressively down. In line with the underlying what? Bearish trend that is being formed on the weekly time frame. What are we seeing? The overall big picture market structure is bearish, but the short-term retracement has a bullish market structure. Which one will you choose? So market structure is just like any other facilitator of liquidity, whereby smart money uses to what? Make money, because liquidity is the genotype of the market. That is how it works. So now, we don't need to stress ourselves anymore. I am bearish for USD-CHF. Now, there's what they call getting weekly ranges. Thereby, you have specific amount of trade per week. You are looking for bearish move in such a way that any bullish move that comes into the market, you are targeting what? Bearish move. Targeting what? At least 10, 5, 6, 7:1 your risk to reward ratio. Thereby, if you were to have losses along the way, you'll be able to mitigate that loss. That is weekly range assessment. Thereby, you have to be what? Present at all days, especially days that are against the narrative of the week, thereby giving smart money or the algo an opportunity to sell at a what? A better price, especially at this what? At this specific time frame and at this on this pair. Now let's go to GU, which is what I'm trading. Let's go to GU. Let's go to the weekly time frame. Now I said last week I want to see a fair value gap formed. There might be a possibility price might want to come and tap into this fair value gap this week before moving to the upside, because price likes that move into this fair value gap. It allows inducement of liquidity in the wrong direction and also upset existing long trade that are trailing those specific stops. They are trailing it in that way so that they can be safe in the market. So now if you look, let's look at the daily time frame. Now on the daily time frame, we see price tap into this bullish order block. So tomorrow I am buy bias. I personally, as a trader, I like entering even before people thinks of entering. But sometimes you will still have losses because the market might want to increase the level of liquidity they are looking for. If you are in the right direction, sometimes it might be that you are wrong on the weekly narrative. And sometimes you might even be wrong on the weekly narrative, but the way you engage your trade as a daily trader and as a day trader, engaging every week, knowing when you will take your profit and get out for the week, you can still be profitable. Because the most important thing is the draw on liquidity, not even the weekly close. So now what I'm looking for is at least price should go to 1.300 to 1.300 to 1.3100 this week possibly, because we still have moves that needs to be met. This liquidity, they will not let it go free, and they will not allow that market to go free for those people that are short. Possibly I might be wrong, but at the end of the day, we know what we are looking for. Now I am bullish tomorrow, which is Monday. Now if I'm wrong, I have a backup plan. If I'm wrong, all I know is if I go to the weekly time frame, I know this, that price wants to tap into this weekly fair value gap before moving. So anytime price taps into this weekly fair value gap and I see a bullish momentum in the market, a bullish momentum on the daily time frame in the market, possibly on Tuesday and Wednesday, I'll be able to target these highs again. So I know what to do tomorrow. I am buying tomorrow. Then if I'm wrong tomorrow, I wait. The key in this market is ability to wait for specific setup for you to achieve your specific aim. Now what you need to do is, and what you need to understand is this: on the 4 hours, you see break in market structure. You will see a break in market structure whereby lows are being taken out. You understand? Lows are being taken out. Okay, we have a break in market structure back into this bearish order block. Price continues seeking lower price. You might think, okay, price is going to come. Possibly you might be right. I'm not arguing that fact. You might be right. But what is just there is that based on my own narrative, based on my own drawn liquidity, I am still bullish for what? GDP USD. I want to see price move back to these highs of 1.3400, because I read it somewhere that there's an inflation when it comes to the dollar, And once there's an inflation, correct me if I'm wrong, the dollar should be what? Declining. So thereby, I still have small fundamentals backing me up a little bit. So let's just see what happens. So on the weekly time frame, I am bullish. Now for Euro USD, I am still bullish. I am still bullish. I am still bullish. I am still bullish. You know, if you look at the daily time frame, you will see it always. You will see these are the behaviors of price. Trapping pools of liquidity in the opposite side of the market before moving. Where you see another thing, where you see volatility and engagement, whereby you will see 10 weeks. If price is going back, it will take only 2 weeks. Volatility has the ability to cover ranges. In that way, everything in price can be balanced. Nothing is left. So if price is going up, it must sometime and some way go back there. Maybe this year, next year, it must always go up because everything is equal to zero. In that way, nobody has that power in the market. Nobody is safe. To cut it short, you see these equal eyes here, price like going there and creating liquidity so that people will this is a key level of resistance. Price should continue seeking lower price because possibly we're at premium. I said it, premium is premium when it's premium in the underlying narrative. Discount is discount when it's discount in the underlying narrative. So you understand. So that is just the real for gold. Now gold, I said it last week that price to seek the 3,000 level. I don't know, price tap the 3,000. Some people are still buying at that level. Everybody is different. Once reaching 3,000, you didn't make money on Tuesday, you didn't make money on Wednesday, you didn't make money on Thursday, you didn't even make money on Friday, the London session. You understand? You now price tap 3,000, you want to be what? You want to still make money. Let it keep going on. After Tuesday, I bought this market once I saw price tap into this daily order block on Tuesday. Though it was on my demo, it's something that it's normal drill. Now, after posting this video, I want to talk about a specific topic. Very beautiful topic. So thank you very much. Thank you. I'm going to continue on my next video. So thank you. Thank you very much.